think it makes more sense to talk about what's going on in the market right now. So if you look at this chart and you look at let's say we look at from here, December 20th to here, and we look at that and we compare it to maybe this time period, May to August. Other than the obvious trend, what's the major difference here that you see on this chart? I would say it's volatility and range. That's the major difference. It's just staring you in the face. If you look at here from December 20th, these candles are enormous. The volatility in the daily range is just huge. And if you look back here from the run up from when it touched this trend line back in May, much less range expansion, much less volatility. Daily ranges were much more constrained. And that this is a time where I can take swing trades and find entries. This for me is nearly impossible because these ranges are so huge. And a day like this, I mean, this is a fantastic day if you're a day trader, and you decided, hey, I'm gonna bank on a reversal and a trend up day. I'm sure somebody made a killing doing that, right? But there's plenty that also got railroaded. But for swing trading, this was no man's land for me. And when you see these candles like this, I'm generally staying away. And if you go back, this is what happens. Like this is what happened in the COVID crash. Look at those candles. I mean, and they didn't start. The volatility didn't start coming out of the market until much later on, actually. So it's really hard to find proper entries for me in this type of volatility. So I really actually use that volatility as my main sign to just stay away. And I think it wasn't until like January 6th I started tweeting, I'm done here. I'm mainly cash. Because what happened here is I saw this move, and that's not a healthy move by any stretch of the imagination. In fact, in our last interview, we were looking at the IWM chart, and I saw this move. And that is not healthy price action. So I saw that move in SPY, and combined that more importantly with the fact that, or in Qs, and combined that more importantly with the fact that I just wasn't having setups for what I need to do. Right, there were no setups that I wanted to take. So the combination of not having setups to trade for my style and seeing this volatility kept me out. And honestly, it's been pretty easy to stay out because this hasn't given me an opportunity to jump back in any meaningful way. And I think that's actually, it's in a way doing me a favor. And I've seen some people say sort of the same thing. This has been kind of easy to avoid. It's not easy if you're new, and it's not easy if you are not in a really developed system or not confident in your system. But this has been pretty easy to avoid if you're trading the way I trade, which is I'm not going to trade unless I have my setups, and I'm not going to trade this really high volatility environment. So those are my thoughts right now on what's going on. And I simply don't have setups to point to. What I did do was go short. A recent trade I did was go short here. And this was just classic. I mean, this is just a beautiful bear flag here. It came right up to this what became resistance level that had been in place for, since March of last year. And IWM is it's the poster child for obnoxious chop for this entire time period. And then we had the breakout that reversed. So this just set us up. This bear flag is just perfect. So I played this actually with TZA and got in as it broke down here. I took the final partial off today, but that's really like the only activity I'm doing right now. And I'm really sticking to, my playbook of not over trading, not taking setups that aren't there, not staring at a chart and trying to manufacture a setup and just waiting. And it comes back to the patience and the discipline. I'm just going to wait until my setups are there again. And finding a bottom, I'm babbling again, so tell me to shut up whenever, but finding a bottom is a fool's errand. And I think it takes a while to realize that because there's so many people that are trying to find a bottom. But did anybody buy right here and hold until right there? 0 people did that, right? Yeah. And if you got in here, your money's just as good. Yeah. You don't get bonus points or a free game if you got in at the bottom. And what's going to happen 99% of the time is you're just going to get chopped up trying to chase that. You're going to get chopped up here. You're going to get chopped up down here. You're going to get chopped up here. Anywhere where you're trying to find a bottom, you're going to end up getting chopped up if your goal is to find a bottom. So my goal is to wait until my setups show up again. So if this is a bottom, I honestly don't care right now. I mean, for the sake of the economy and the market in general, sure, I prefer it's a bottom as opposed to going to a protracted bear market. But in terms of my trading, I don't really care if this is a bottom because all I know right now is I don't have my setups and there's nothing for me to do. And that candle is one crazy looking candle right there. Who knows? That's a lot of short covering right there. There's a lot of volume that came in, but it's also a very crazy candle. There's no way for me to enter. Most of the charts look like that now. In fact, I was looking for what I'd been seeing relative strength in. Cybersecurity had a good day today. Cybersecurity had been strong recently, so I was already looking at Zscaler and
PanW,
PanW, and PanW broke up through this level today. I mean, this is a big day on PanW. It makes sense for cybersecurity to have strength today, so there's that, right? So this may not just be short covering. It makes sense in a world where there's active war taking place, and the heightened geopolitical issues going on for cybersecurity to make a run here. So this may be real. I have no idea, but I can't enter on this candle. I need this to tighten up. Maybe this pulls back, has an inside day. This could have an enormous day and still be an inside day. So I need range contraction in a big way here. This is not a candle I can enter on for what I do. Mm-hmm. And a lot of the names that were showing relative strength, took these nosedives and have these big, huge reversal candles. That's what you're seeing out there right now is these huge range bars. And I can't get in. I personally, can't get in on that. I need range contraction, as I was saying. So, much tighter candles like we're seeing here. Things getting tight here on moving averages right below a pivot. That's a setup.
Yeah. I kind of think of it as, going back to my engineering roots, when you add an impulse to a system and you see the response, what you want is after that big volatility, you want to see contraction. And from that contraction, as we know, the markets comes out expansion, what we've been talking about. And right now, we're not out of that huge volatility. And until we see that, it's going to be hard to, have confidence in the setup. And I think having that confidence is really important, and having that tightness is really important because it allows you to manage risk more tightly and size something more significantly, so it actually, moves the needle if it works in your favor. And if you don't have that confidence and you can't manage risk tightly, you can't take large positions, because if we get a gap down 2% tomorrow, something else happens news related with Ukraine, inflation, all these news events, you're going to take a hit to your account that you shouldn't have, because the environment wasn't quite right to size quite as much as you did.
Exactly.
So I think having those tight setups is important because it allows you to size in a way that makes sense for the environment that's actually going to make a difference in your performance.
Yep. And I mean, sizing huge in a volatile market is a risky endeavor.
Recipe for disaster. Yeah.
Right.
Yeah.
But for people who may be very brand new, I'm just going to throw up this risk reward tool on TradingView, which every platform basically has. So let's say you enter here tomorrow. Let's say you're excited about this reversal candle and you're convinced this is going to make a quick move up and follow through. If you're trading the daily time frame like I do, a reasonable place to put your stop is the low of the day. But I mean, that is so ridiculously far below your entry that to get a decent return, to get a 3-to-1 return, price has to go all the way up here. So that's just a visual, for people that are new. I know people that are more experienced are like, I know all this, but this is just an example for people that are new of a poor risk reward ratio and why you would not want to enter on a huge candle like that. Now you can say, yeah, but I would take an intraday kind of stop and I'd move my stop up here. That's fine. That's not what I do, but that would improve your risk reward ratio if you want to take that trade. I wouldn't take that trade in this type of volatile market, because more likely than not, like this range expansion is not going to get smaller tomorrow, and you have a high probability of getting taken out. So what I would rather do is look for a day like this back here, enter right around this level, which is definitely something I would do. Put your stop at the low of the day here, and then you've got real room, to make that trade work. So that's just like the nuts and bolts of why I'd look for range contraction and look for tighter days to enter. So your risk reward proposition is where it should be. If you can't set a close stop, you've got a backwards risk reward proposition basically.
Yep, perfect. And yeah, we talked about the volatility contraction, but I'm also curious, because you kind of take a top-down approach, sector, industry group, then the stock. What are you looking for in terms of overall sectors shaping up and overall industry groups shaping up that would indicate to you that that the environment's actually changing? We could have a sustainable rally that could be good for my process.
Yeah, in terms of sustainable rally, that's kind of a separate story. Because right now I would consider all this to be a counter trend rally, and I wouldn't be looking for relative strength necessarily in a counter trend rally. I'd be looking for relative strength on the way down. And I've been doing that. So, but what I do is I'll take all 11 spider sectors and chart them out. So this is just a simple bare bones way I'm looking for sector strength, right? And these are ugly charts right now. These are very ugly charts. We did have this crazy day today on most of these charts here, but for the most part, these have broken long-standing downtrend lines, have taken out January lows, broken diagonal and horizontal key levels, and that's what these charts look like. But let's should these start getting healthier, let's say industrials here, which is up next, should this broke down today, should this start getting healthier and start pushing up here, showing relative strength, and I would dig into the industrials. I would dig into some ETFs and just look at what's going on with industries within the industrials and look at what charts are leading that strength and start. That's where I would hone in on when I talk about finding relative strength from the sector down to the industry down to the name. So that I'm always looking at these. Recently, it's only really been energy that's been outperforming. And that's a whole separate topic because it's just such a volatile industry. And sector. But this is where I've been fishing lately if I'm going to take long trades, because this has been the outperforming sector. So it's as simple as that. And I go from there. But I chart all 11 of these on an ongoing basis. Like here's healthcare. I'm not a big fan of head shoulders, but that one's just staring you right in the face. So I'm not looking for relative strength there. Consumer discretionary, same kind of idea. This huge uptrend that broke, looks a little bit like that bear flag and IWM.
So pattern, yeah.
This is not what I want to see, right? When I want to see relative strength. So, but there are, I remember very clearly in this area, this was when I was really fishing in the consumer discretionary sector, because this was making a clear breakout to all-time highs, and this was at the time the leading sector. So that is something I was absolutely looking forward to make plays in there. And then you just dig in. When I see a sector setting up like this, maybe this is like doing my weekend homework, and I see a sector setting up like that, I'll spend some extra time looking at what the heck's going on in that sector, what's really making that move happen, what could benefit most from that move. So that's going back to the beginning of the presentation, like how I operate.
Yeah, it's amazing flipping in between these sectors and then looking at XLE, and you can clearly see it's been the index, the sector that's been working in this environment, just looking at the chart in one glance. It's above the key moving averages, acting well.
Yep. And I think, let's see, I'll put up an example of, some of the things I was talking about earlier, because may as well show some of the ideas. This was actually an options trade. So here's, a base. I would definitely call this a base. This is not the biggest base in the world. This is not a 18-month base, but this is definitely the kind of base I'm talking about, right? So we have here, you call it a cup and handle, whatever you want to call it. I still call it mainly. The names really are largely meaningless to me, honestly. Everybody wants to call things different things, and we've all learned the names. But to me, this is downtrend line compression, right? So here's this downtrend line. It's a near-term downtrend line, and here's the compression below it, and that's what I'm looking for. And this set up nicely on the 50-day, 20-day. I have a 9-day right here. I set up nicely on the moving averages, decreasing volume here, all the things that I want to see. So this is like a nuts and bolts setup. And I actually did play this with options here, because like I said, for me to get really tight here on Apple, I'd have allocated, and Apple has, tremendous volume on options change. So played this for a nice move. And this is the type of thing I'm looking for. So this was a real quick swing. That was actually a day where like the big mega caps were running. I think Amazon was running the same time. But that's an example of the type of bread and butter, setup I'm looking for. But it's all based on range contraction, like I said, and relative strength. So I wouldn't like to set up nearly as much if it was way down here below the 200 day, right? So I want strength, so all those names now that are below the 200 day, which are a huge amount of them, is just it's not fitting my style right now. So I'm taking a backseat and I'm watching. But the market can change very quickly, and we can start having setups like this again. So that's why I stay engaged. I flip through my 700 or 800 charts a day, more on the weekend, and you just want to stay engaged so that when the time comes again, you're ready to execute.
Absolutely. And one thing that I want to ask you, because I always get questions about it, is offensive sell rules and kind of selling proactively to try to keep your confidence up, be able to play a portion if it's the right environment for a longer move. So I'd love to hear your thoughts in general about when you decide to sell a stock, and also some aggressive selling techniques that you use, if you use any at all.
So like, for instance, here, I definitely sold some on this first breakout day, right? Because these were options. So this was definitely up 100% at that time. So that's 1 times risk for options for me, because my stop is at 0. So my 1R doesn't hit until I'm at 100% a gain on options. So I definitely sold some here, like for those rules that I have. And then I take more out as we move along. But if I don't take that first partial, I know for myself, what I'll do is I'll end up taking the whole position off sooner than I should. So for me, taking that first partial is what allows me to ride this a little bit more. Now, in terms of being aggressive with it, like if we're in a super choppy market, I'll take more off than a third or 25% at 1R. I'll take more off. So 2021 was like, a brutal class in doing that. So for half the year, I definitely did not get aggressive enough doing that, and I fully recognized that. And then as the year went on, I started getting much more aggressive and taking more off at 1 times risk, and because everything was reversing. So I think in terms of your question about do I get aggressive with it, if we're in a market like 2021 was, where it seemed like every breakout was reversing. It's not the truth, but it seemed that way. You got to just take more off the table when you're in the money, and be happy with it. Versus 2020, where things were just, you were losing money if you didn't let your trade run. You were not being aggressive enough if you weren't letting your trade run. So there can't be one simple rule applicable to every market environment. So you have to know how you're going to tweak your style in the different markets. So, and going back to Mark Minervini, which I like to do this time around, apparently. In one of the interviews, it wasn't one of your interviews, actually, it was a tweet. And he talked about how he handled 2021. I mean, the guy made 300% on $1 million account in 2021, right? So like, impressive to say the least, right? But he said what he did was he was trading like an animal. I remember he tweeted that. And for me, that seemed like sort of incongruous with his style, because his style doesn't strike me as trading like an animal. But what he was saying is, I adjusted to this market, and that's what it needed for me to win this competition. That's what I needed to do, right? So I think you have to adjust to the market, and that was just something that came to my mind as somebody who really figured out quickly how to adjust to the market. I definitely didn't in 2021. I didn't adjust quickly enough, but I think you adapt your rules based on the market environment.
Yeah, and one way that I've seen people post, and I think it's really helpful to keep in touch with kind of what the current market environment is looking at your average gain over a certain period, because then you can kind of get a sense of, how long are stocks working when I do buy my setup. Is that something you look at all, and do you use that to kind of, as feedback for your system to then, okay, I got to take profits a little bit more quickly. I should take more off at 1R than I usually do, because we are just in a choppier environment.
Yeah, definitely. But that goes back to like the feedback of your account is the main thing. And I think that's what we want to focus on. So instead of doing like a post-mortem on every single trade, I will look back, on the weekends, or I'll go more in depth once a month at the very least, and look at the ratios. And those key ratios will tell you a lot. So like if my winning trade is being closed out at, like 1.2R or something like that, I know things have really changed, right? Because that's not the goal. That's not how I'm going to perform well. And you have two choices at that point. Do you raise your stops even tighter so that you can change that risk reward ratio, or do you take more off at a higher level, be more aggressive taking it off? But that analysis period of looking through your metrics is the key decision maker for me. And that again, it ties in with progressive exposure. You want to get bigger when you've got traction. Like if I see trades that start to blow out to 3-4R, a couple in a row, that hey, it's time to size up, and if the inverse happens, time to pull back.
Sounds good. And I've recently kind of been experimenting with kind of a new chart layout, which is much more darker themed, and I got tired of just staring at a pure.
Yeah. So this is one of my biggest winners here. This is that kind of that small cap during pre-market VCT type of moves. So what I found, just taking a deep dive into this, is the best plays are when they come out like at around, the news comes out at around, and I'm in Chicago time, so it's like 6:45, 7 a.m. So Eastern, like 8 a.m. So you'll see on the left side right there, so it's kind of like it's a flag almost, and
right.
You see it comes out left, does like kind of this mini VCP right here. It just tightens up, but you can see there's no selling, barely any selling. And this is the 8. I use the 8 moving average. I like it when it's tight above the 8. That gives me even more conviction. And the volume's drying up. You could see on the bottom here, you can see it. I put a trend line where the volume's dropping off. And then you finally see buyers coming back in, right? So I'm buying right here at that circle, just because I saw volume coming in. And I wanted to buy before the breakout, because obviously with the breakout, and I'm not buying too far before the breakout or too ahead of the breakout, but still, like when the breakout happens, it happens big. Like so I always want to try to get in before, and then I'll set my stop loss on either the low of this candle right here or low of this candle. Because if it falls below that, and if it falls below the 8-day, that's the probabilities of it going lower are very high.
Right.
So, like I said, really the first sell, I'm always selling at 15 to 20%. I'm selling half because I'm taking big positions. And, I know a lot of people, they pyramid into positions, like they'll buy a quarter of a position, and they'll do a quarter of a position at the next buy point, low cheats, the cheats, and the handle. I kind of do the opposite. I want to put my full position with a tight stop in the beginning, and I want to get rid of it pretty quickly on the way up. So, I took half off here,
Mhm.
289. I bought at 243. Then my second sell was right here at 368. Um, and you could see you got like a kind of like a doji candle where it's it doesn't know which way to go.
Mhm.
So play it safe. I think it was like a 50% return in a matter of 15 20 minutes. So might as well just take it off. If it goes without me, so be it. I got 50% in the bank. And then actually I had a third sell because I thought it would keep going up, and I wanted to just keep a little portion in there just to keep my mind right.
Mhm.
I don't like seeing it go without me, kind of getting that FOMO. So I just keep a smaller size on, and I took off the last part to right before the open, and then you can see at the open. I mean, the open is just it's
Reverses.
crazy. The first 30 minutes, it's just everyone's just trying to get in, and they play tricks. I just don't want to be a part of it.
So you actually, it sounds like you almost prefer to trade pre-market. That's kind of interesting.
Yeah, I do, because the news really comes out in the pre-market, and that's
Mhm.
where I feel like the VCP in the pre-market is higher probability, just because there's not as many players, if that makes sense. Like it's not as efficiently priced.
And how did this one come on your radar? Were you looking for high volume screens pre-market, and that's how you found it, or was it based on the news catalyst that you were paying attention to that this got on your radar?
Yeah, this got on my radar. I use a screen every morning. It's a basic screen. It's just stocks that are moving up 1% on a million or plus volume. Um, and this was one of the stocks that was moving the highest. And I kind of sorted from percent gainer, what's gapping up the most. And I saw this was gapping up the most. Pulled up the graph. Took a quick look at the news, and then another aspect that I wanted to show too is you got to take a look at the daily too. You want to make sure on the daily that there's no bag holders on the left on your entry. So I'm buying at 243, right?
Mm-hmm.
So if I look at the daily, I don't see any volume here. No volume at all compared to like this volume.
It's huge. Yeah, compared to that.
I mean, the only bag holder I could possibly see is from 2023, like in the beginning of the year, January, and that price is at about 3 all the way to $4. And you
Mm-hmm.
can see that's why. Look at this candle right here. During the day, it just sold off there. And I bet you it's because of all that supply. And another reason I had conviction on this is it tied into the theme of the market, which was AI.
Semis. Yeah.
A company, Lays Technologies, that received an order from Lasertown, a big defense contractor. So, and it was for their semiconductor division. So, semiconductors, AI, tied into the theme. It was the tightening up above the 8-day and VCP action. There was only supply from about 2 years ago. So, that just gave me conviction to take that position.
Is there anything else on the daily chart that in particular you look for? I know neglect is something that a lot of people who trade big one-day moves are looking for. Is that something you do too, or are there other aspects, characteristics that you always try to find on the daily?
Yeah, I mean, for these type of stocks too, they're always trading at near their all-time lows. So you can see like this stock these are garbage stocks. This stock got
Demolished. Yeah.
demolished, and at some point it's going to turn up, and it just needs some sort of catalyst, and that was the catalyst. And over here I marked the big resistance at around 2.5. So I'll take a look at that too, just to be aware of it.
Mm-hmm.
And, just something I do out of habit, just marking the charts too.
Yeah. Could you go back to the intraday time frame for just a second here? Because I think I got a question here.
Yeah, so that's where the big resistance is right here.
Right.
So once it clears that even gave me more conviction, because that was a big resistance level that it's been stubborn, and the more you test those resistance levels, the higher probability it is to crack, and you add a catalyst to it, and that's going to give it the power it needs to get through that level.
Yeah.
And then obviously all the other traders that do this every day as well, trade pre-market, they all see this.
Yeah.
And that's why I try to get in a little before.
And you mentioned that you usually either put your stop at the low of your entry point candle or the low of the previous candle, which is kind of low of the consolidation as well. What kind of makes that decision for you? When would you do one versus the other? Does it depend on how far away that the low of the previous day is, or the shape of the overall pullback VCP? What kind of decides it for you?
Yeah, it's primarily just the amount of risk. So if it's like let's say this candle right here, if I entered at 243 and the low of the candle was 8% away or 10% away, then I'm working my stop there. But if I could increase my risk, let's say this candle is instead this candle is 10% away from the entry. I'm going to give it more room to to play out. If that makes sense.
Yeah, and after a breakout like this, say this didn't work, what would be some warning signs that you're looking for that would, put you on guard and make you, be more defensive and looking to sell early, cut your loss early? What kind of characteristics do you look for a failed breakout move like this?
Yeah, I would say, you know, like I said, if it fails the 8-day moving average, and typically below the VWAP too, it comes below the VWAP. Those are kind of warning signs. And then if I see, bigger selling volume compared to the green volume, then that's another warning sign as well. While it's failing, I mean, for example, like here, let me give you an example.
Sure.
I'm just using this as an example. Like the volume bars here, you see how the red volume
Yep.
overwhelms the green volume?
Mhm.
And then I also have this indicator that tells me the exact amount that's selling. So here is 2,600,000 shares that have been sold compared to this green candle here, which has 1,630,000. So, I mean, let's pretend like those candles are here. Like this red candle was there with 2 million shares, and the green candle before was 1 million something shares. I mean, that means there's a ton of sellers up here, and
Right.
I don't want. That's going to tell me to get out, and maybe look, because you could always re-enter.
Yep.
That's what I sometimes have a tough time still to this day, realizing you could always re-enter, but it's a fact.
Yep. And you mentioned VWAP. How do you kind of incorporate that into your process?
VWAP, like I kind of like it to be above VWAP. It just gives me more conviction. Doesn't mean I won't take a trade that's under the VWAP. It kind of resembles the trend for me. Like if it's above VWAP, that means the trend is high. It's up. If it's below VWAP, that means the trend is down. And if I'm taking a trade below VWAP, I'm gonna have a really tight stop. It's above VWAP. I can have a little bit bigger of a stop, bigger risk.
Gotcha. Perfect. Did you have another example you want to share here, maybe on a kind of power earnings gap or whatever you'd like to share as well?
Here, this was my biggest trade to date, biggest winner.
Nice.
And it was on Gap.
Mm-hmm.
Yeah.
This is pretty recent.
This is pretty recent. Yeah, May 31st. So Gap. So like I said, how I take it in order to the technicals. So you can see you got this trend line right here that it's gapping above. So that's one good thing. Then this is all-time highs up here. Okay, so I'm marking that, and you have this gap right here previously. So that's going to be a big area, this zone.
Mm-hmm.
And with Gap as well, with the power earnings gaps too. Like this is on a downtrend, kind of. It's kind of neglected. And then also, I think 2 days before, Abercrombie reported earnings, and they crushed it. And kind of the theme now was we were moving more from the AI tech more into kind of the retail. Retail had a moment in earnings, and I think it's because they were going for more of the value plays. They had really low PE values. If I put that in right here, the PE was low for kind of the retail stocks, and I think the big players were kind of doing kind of like a minor rotation and going for more value plays. But like I mentioned earlier, what I'm looking for in the earnings plays is the earnings growth, the sales growth, earnings price, sales price, and what I want to see is triple digits from one of those.
Mm-hmm.
And I'm getting triple digits on earnings growth at astronomical level, 999%. You know how Market Surge or Market Smith does that? It's not the real percentage, but it's actually higher than that. And then the earnings surprise, it's crazy to have 192% earnings surprise. So those, I'll only look for one out of those four to have triple digits.
Mm-hmm.
And I got 2 out of 4. And I got the technicals, and I got the theme, and we're going to add juice to it because there's 18% short flow. Okay. And then really what I look for is 3 price target raised, and I'm getting 7 price target raised. And I always want to see the kind of the important ones for me are Citibank, Goldman Sachs, and Morgan Stanley. So that's why I marked, Citi and Morgan Stanley there.
Mm-hmm.
Their guidance, I think guidance is one of the most important things in earnings, and they're, guided up higher. So, I mean, this was a very high conviction play for me. So with Gap as well is another one that you could use, 4 times leverage intraday to trade this. And so how I entered into this position. So like I said in the beginning, like with the earnings gaps, like this already, I think they released it after the market. So, gapped up post-market and then pre-market. You see it's still kind of doing a little run, and then it's, fading big time. Mm-hmm. And that goes into the open. And this is just me from doing kind of deep dives into past earning plays, earnings winners that, I've noticed that they kind of, fade pre-market into market open. I think people just taking profits off of, post-market, pre-market action. But then, so I'm waiting for this. I'm waiting for the dump. I'm waiting for it to turn, waiting for that turn. So I'm seeing this red candle right here, and this is on a 2-minute time frame I'm using. Mm-hmm. Is you're seeing kind of like a bullish candle almost, because you see how this wick, this means there's buyers right here, mm-hmm. right? and then this candle develops. This candle takes the high of the previous candle and also has that wick, and look at the volume.
Right.
So, that tells me this is where I was entering right here.
Were you entering through the high of the prior green candle, or what was kind of your reason for entry right there?
I'm entering right through this high.
Gotcha.
And it's because it has the volume. And I actually entered when this candle was developing, and I saw it was going to be an expansion candle, and there's more volume coming in. So, and then I put my stop at the low of the day. It's pretty tight stop. And then,
yeah, for this one, what was how did you manage the position once you got in?
So for exits, I switch over to a 5-minute time frame.
Mm-hmm.
And so I remember I have all those zones marked up. I have that gap from the daily.
Yep. So
right when it's at the 5-minute, I see, this no problems. It's slice through that zone. And then right here, I took half off because it's the first red candle. In 5 minutes, longer time frame than 2 minutes. Still pretty short time frame, but what you'll typically see in the morning, like especially around 9:30, I want to take off a portion of my position. And mind you, I have 4 times leverage on this,
right.
So I'm trying to take off half. Then I move my stop to break even. So I locked in a pretty big portion, and then with this, I'm letting this run. And the reason I let it run is because I remember Abercrombie, when they reported earnings, it was just a smooth sailing channel the whole day on a 5-minute time frame, and I was like, I think Gap's going to do something very similar. So I let that play out until right here. You kind of get a little sell off. This is at all-time highs, so I'm seeing people, traders, or sellers coming in, and I want to give it the benefit of the doubt to kind of make a turn back, and it did kind of later. But this was also on a Friday too. And this was like my biggest trade to date. So I was just like, I'm just gonna lock in these profits and log off. And so yeah, I mean the return was 27.5% for my portfolio overall. So that's pretty good.
Yeah, that's a crazy trade. So you went your full account with Forex margin in this one. Is that correct?
I did.
Yeah. So let's talk about managing risk right now and kind of mindset with that, because obviously you're taking much more risk than maybe the typical trader.
Yeah.
I guess, what do you think enables you to do that? Or do you plan to kind of continue to do that throughout your whole career, or kind of as your portfolio grows or whatever, you plan to kind of scale it back a little bit and still trade aggressive, but maybe not take as much risk as you're doing now?
I think I'm going to be as aggressive until, I'm at a level where, it's tough to enter and exit positions. And I don't know
liquidity wise. Yeah.
And that's why kind of like Minervini's program, I think it's more tailored to that, but the technicals are still the same. It's just he does more like I'm entering a quarter or half in at this point and at this point, because he can't. That's what some of the benefits of having a smaller account is I can do this type of thing. And then when I'm in the USIC, this is I'm trying to
go for it. Yeah. Yeah.
And I kind of have the mentality like I like playing big. I like being on the edge of my seat, and I like those moves. And I'm able to handle big losses too. Like this is not all. I'm not
winners.
Time.
Yeah.
I take some big losses, and it's just something I'm able to deal with. And I think having experience with the options early on, I think that was the only benefit of trading those options back then. And playing big, or I don't know, maybe it's something in my bloodline. Who knows? I don't. It's just because I know traders do have a tough time with risk, but if you want the big returns, this is you gotta trade with big money. And I have confidence, and this is what a big thing I learned from Pradeep is you got to do those deep dives and look at the winners. And that's just going to give you more conviction when you see it in a live market environment. Like I've seen this 100 times, and I know how this. I know the probability of this is going to work out. So I'm going to, put in this big position. But also, you still got the tight risk. It's not like you're going to lose all that money.
Yeah, 100%. And this year, what's kind of been your steepest drawdown off your peak, if you can remember?
It's actually recently. So yeah, this is embarrassing to say, but July 1st, I took a short, 4 times leverage on Nvidia. And I was a little early, but. And I took a massive hit. I lost, I don't know percentage wise, but I lost over 40,000 on that. And it's just an ego thing. And I really thought it was going to go down. I was just looking at it today because I was.
Yeah, do you want to bring it up?
And that's why I don't like shorting. It's tough. Shorting is so hard.
Mm-hmm.
But especially shorting and during a holiday week or short week, I feel like a lot of the short weeks are more. The stock the market goes up. Like all the serious traders are gone, and it's just like you're leaving the kids alone,
Right.
So I took the short right here. You could see how this has this massive wick. That's me getting stuck in this wick right here, because I saw it falling. You see these red candles. Like this is an outside day. This is a massive outside day in the daily.
Right.
So I'm saying, okay, this is running out of juice. It hit that trend line. Let me see if I could decrease it. Hit this trend line right here, and then the next day, keeps on off, and this is the 20-day that I use, and it sold below the 20 line. This is all on big volume. So these are not, small people exiting. And obviously it's going to chop around. It's not just going to straight down. And then I saw it in the morning, the market opened selling off really hard. I was like,
Yep.
this is it. It's happening right now. It's going to take off this area right here. But it didn't. It bought the dip. And yeah, I got stuck with it. And my ego kicked in, saying that, it's going to go down. There's no way it doesn't go down. I held it overnight and I exited right here, somewhere around here. Yeah, it was not a fond memory, but
It'll be a good lesson that you'll take forever. So it's valuable in that way for sure. I mean, that gap trade was awesome. So
this is one of the small caps in pre-market.
Mhm.
And this one, you got the news, like I said, coming out right here, and then it comes back down. Comes back down like this is going to be a perfect VCP going into the open. You see this? Like tightening here, tightens here, tightens here, and then massive volume right here.
Mhm.
And I bought over here like an idiot, but that's where I bought. And this is where, like you said, you learn. And what I've learned is like at market open, there's going to be a bunch of tricks, especially with this type of play with the VCP, and especially with something that's already gapping up a lot. And I mean, I'm never going to buy in this type of candle again. This candle is massive. Like this is, I'm buying into where people are selling. And like I said, I take a maximal stop loss of 10% because obviously the low of this is higher than 10% for sure.
Right.
And then this is where I started looking at the daily. I learned from this trade that you see this resistance line right here.
Yep.
This is massive supply from the daily, and that's when I started looking. It taught me to start looking at dailies,
Mhm.
and, at the bag holders on the daily, not just the resistance level, but also try to find the big bag holders.
Mhm.
Let me pull it up.
So this one, it looks like you also kind of bought a lot further from the VCP pivot than the other winner they shared with the LASE, I think.
Yeah, I bought it
219.
back to the high.
Yeah.
It was hard to get into this.
Yeah.
Obviously I wanted to get in right here. Yeah, I bought it was bad. It was bad. Yeah, so and this is recent too.
Mhm.
Massive supply. Look at all that volume here. And you got that long wick over here. And it's not a coincidence that once it hit that level, that it fell right away.
Mhm.
That is another loss that I learned from.
And this one, I had one other question. Oh yeah. So with this one, and just in general, do you have a certain amount of liquidity that you're looking for? Are you filtering at all by that, or just on that day it has to be moving on a certain amount of volume?
No, it's gotta have daily average of about over 100,000
Mhm.
shares traded. And then, like I said, I do want to see 1 million traded at the time I'm looking, at least.
Mhm.
Of traded. So I got both those checked off there.
Yeah, perfect. Let's see. Were there any others that you want to run through?
I could show you another earnings gap winner.
Yeah, that'd be great.
So this was ARM in February.
Mhm.
So ARM, another thing I look for is recent IPO, and obviously it's tied to the theme, the AI theme, semiconductor. And you kind of got like this minor VCP base right here, all-time highs. And then another aspect I'm looking for is in the pre-market, it already traded equivalent to its daily average. So, and that's just pre-market. So I know there's a lot of juice on that, right? And this had kind of a low float, so that kind of equates to having high short interest. And we're in an early stage of the bull market too. We're in February, and then I got 8 price targets raised from analysts, one being Citibank. So I have a lot going for it for sure.
Mhm.
And then for this one, I just entered right market open.
Mhm.
And sometimes I'll do that on early stages of the bull market. Like for example, a week ago or 2 weeks ago, if there was earnings gaps, I'm looking for reversals. I'm not looking to enter in right away because we're kind of like a late stage or like anticipated corrective stage
Right.
of the market. So kind of more in the early stages of the market, you could get away with entering in right at market open. Usually, what I like doing is buying at the 1 minute opening range breakout, putting my stop low. And you couldn't have had a better trade here. I bought it right here, and then I didn't even take anything off, and I rode this all the way up to when it started turning down on this big red candle.
Mhm. So you saw the red candle kind of reversing lower and also volume coming in. That's kind of what led to the sell there.
Right, and it was also it was a big red candle. Obviously, with these type of plays, you're not gonna get the top, and you just gotta live with that. If you get the top, you got lucky, to be honest. And so I'm just I'm trying to get the most juice out of this. So I'm fine with selling a little below the top, and I'm selling right at this big red candle here.
Mhm.
So
Yeah, well, you got the juice out of it. 65% portfolio gains, not too bad. So
yeah, and this one ARM I was able to use the intraday margin.
Yep.
Well, so 4 times. So just taking your time and researching and doing the deep dives, and then also researching what are the numbers, the analyst price targets, the fundamentals, the technicals, what's the theme of the market, and just being really like tied into the market, what's been going on, what's been working, and you're just putting layers and layers together to increase your confidence, and that allows me to be able to confidently put in that type of size. So
Yeah, I really like that list of basically, as you said, like layers of edges that are increasing the probability of that trade working. I think that's a great thing to have on your charts right there to kind of remind you that that's perfect.
right, exactly. And then I could show you. Let's see. I got one more.
Yeah, let's do it.
I'll show you an earnings gap loser. Which is this ticker, man, that's caused me so many problems. Coinbase.
Coin, yeah.
I know it's caused a lot of people problems, but this one causes so many problems for me. But anyway, they had stellar earnings, 142%. Sales incredible, 52%. Earnings surprise was 5,200%. Sales surprise 16%. The crypto theme, 10 price target raised, 10% short interest, and it took big size. The only downfall of this is probably it was running up into earnings.
That's what I was thinking. Yeah.
But then it was also breaking all-time highs, and that's what Coinbase does. Like the only way you can get into Coinbase is on the pullbacks. You can't get in because this is what it does. It just goes up, shoots up the right side every time. You got to get in somewhere here and be creative. But I got into this position. Let's see, where did I get in? Yeah, so it broke out of that all-time highs at 190. So I just buy the breakout, and I got stopped out immediately. About 5%. It's just a trade that didn't work out, and I mean, you can't win them all, like you said. But the earning gappers, you don't win all of them, even if you have all the layers. But the probability is you're going to win if you're doing it correctly and putting all the layers together. But just want to show you that you're not going to win them all.
Yeah, and like you said, maybe it's something to do with the personality of Coin specifically. Why this one didn't work out. It already moved up the right-hand side so much.
And that's another aspect too. It's a great point that before, in part of your research, when you're going through the numbers, the fundamentals, you want to look at the personality of the stock, which I made a mistake here. Not looking at the personality, and also how it reacts to previous earnings, like and what their numbers were. Like I know, for example, today TSM, like they had, when I was reading the numbers, it was pretty good. They had good guidance, not like eye-popping anything, but I was really surprised that it didn't at least go up at least 5%. It went down, I think it was more than 5%. It gapped up and then reversed. But that also ties into the market environment where we're at.
SMEs, yeah.
If you look at TSM's, how it acts, how it's active on previous earnings, it always, shits the bed. Sorry.
Yep.
My language, but that's what it does.
Yep. I want to ask you, you mentioned you kind of credited deep dives as well for really building that conviction. What did you specifically do to go back and study these setups, build up your layers? And like you said, that just kind of gives you more confidence. What kind of process did you follow to do all those deep dives?
Yeah, I mean, I go pretty wild on them, man. Like here's my Google sheet. Like for the stocks in play, like so I'll go on the ticker. I'll mark like when did the news come out? Did it come out during the day? Was it post market? Was it pre market? Is it a penny stock? ATL means was it at all time lows? What was the short flow? What was the catalyst? What was the industry? Was there supply on the daily? And then just to get confident on the entries, like for this type of move, this stock went up 62%. The risk would have been 9%. You got to get out in 36 minutes. And I'm just looking for similarities between all these types of, catalysts. And also, you could dive into this so deeply that like there's so many different variables that come into play. I'm just trying to find something general, and lock into that, and I'm still adjusting, learning as well, and adding more conviction. But it only comes with experience. But this is the type of things I do, man. I go through it pretty in depth and try to figure out how to get a good entry and good exit.
Yeah, that's excellent. Do you have a favorite type of catalyst that you've noticed for your trading seems to have better success?
Definitely adding a new customer. Usually on the tech side. And then also if it's like a recent IPO type of stock, I like those as well. Or it has like a massive short float. Like I'm talking about 70% short float or higher. Anything that has news with that type of juice, those could get you massive returns. Like I'm talking about triple digits in a day. And I like when the tech companies get a new customer, but also when sometimes they show the dollar amount of new revenue, sometimes they don't. It just depends on the size of the company and how much that's going to affect the revenue when they report earnings. And obviously another good one is like what SMCI did earlier this year.
Right.
Is they reported earnings before the earnings dates are kind of adjusted
guidance.
Look, we're going to report massive earnings, by the way, in a week.
Yep.
So And then if that ties in with coming out of a base, like that's actually another example I had. Hold on a second. 'Cause I called the SMCI move.
Was that what led to the strong January?
Yep, exactly. Yeah, I mean this is like a picture perfect. I'm sure you've seen this chart many times.
Yeah, just a few.
Traders. But yeah, it's picture perfect. I'm just drawing these trend lines just to draw how the contraction gets smaller, smaller and tighter, and then you even get these shakeout here, which gives it even more power because you're exchanging weak holders to serious holders, and just shot up here, and it was a beauty.
What made you sell here? Just capturing the quick move?
Yeah, I just wanted to. I mean, it was something that I wasn't used to, man. Like a 50% move, I think, in a day, something like that. And I'm just gonna sell it all, and I'll re-enter. And I day traded it all the way up. Like I would day trade SMCI and Nvidia like every day, and that also helped me out a lot. During the early bull market, it was pretty easy. It would if I saw a market open that went red, I'm looking for a reversal on SMCI and Nvidia, and I'm having tight risk and I'm putting a big position on.
Yeah.
I'm just trying to get a couple points.
Yeah, excellent. Was there anything else chart related that you want to share with everybody?